Let's get across the market open now. Jessica Amir joining us from Mumu. Jess, welcome to Tuesday. Look, fairly uneventful night, certainly on Wall Street. Finished fairly mixed territory, pretty much flat. Still waiting on some further news, particularly as tariffs are concerned.
Yeah, that's pretty much it. It's clear, though, that the bulls are probably back, but perhaps you could say they're sitting in a bit of a holding pen for a hot minute. But it's clear that investors do believe, Andrew, that the worst is over. We've seen that the VIX has continued to fall, which is really pleasing, now at its lowest level in 4 weeks. And, of course, locally, just 4 more sleeps away to the Australian federal election. So polls and betting agencies are both suggesting that Labor will win. You could say that positioning over the last couple of trading sessions are suggesting that local investors, Andrew, are probably hedging their bets, betting that maybe the Libs may have a chance. They've been buying the dip, I guess you could say, into uranium plays. Lots to be said about buying the dip as well. US stocks continuing to march up off their lows. We've seen the Nasdaq 100 charge. It's perhaps in a bull market, you could say. It's up 16% from its April 7 lows. The Aussie share market not up that much, though, up 9%. So there's a lot to be said about time in the market, not just timing the market. And when you do set the market down 5%, given that we have been in a bull market for several years, there's plenty of opportunities to be had about buying the dip and taking a long-term view.
Yeah, it's very much focused this week on earnings from 4 of the Mag 7.
Yeah, definitely. I think that'll be the next catalyst, really, to see if we can see markets continue to rally on up. Absolutely. We've already seen better than expected results out of Apple, Alphabet, and we have seen, I guess, in totality, you could say that big tech companies are indeed prepared to spend billions of dollars on AI, regardless of what we're seeing with concerns about global growth slowing on the back of tariff concerns and tantrums. That is really pleasing, and that is another reason why we've seen equities rally up. Also, Andrew, adding into the mix, do consider that when the market hit its lows for the Aussie share market and the US market, remember that was April 7, fear was peaking at 60. It's now down to a level of about 23. Then we saw cash balances swell to $7.4 trillion, but now cash balances have started to come down. They're about $6.8 trillion. I said that incorrectly. $7.4 trillion was the max cash balance in the height of fear when markets hit lows, and cash balances have now gone down to 6.9 trillion. So money is coming back into the equity market. And if we do see Amazon, Amazon, Meta, Microsoft report better than expected results, and if we don't see a further tariff dummy spit, then the breadth of the rally could continue. Would expect the Aussie share market to follow suit as well.
Now, locally, Jess, we're getting more of those quarterlies roll through this morning, in particular in the mining sector. We've got Fortescue, Minres, Northern Star.
There's so much to go through, isn't there? But I think if we just take a big step back and think about what commodities are really grinding higher, without a doubt, the key standout has absolutely been gold. So the gold price is still up markedly, high double digits, up about 25%. And so, yes, we have seen all in all better than expected results, as you would expect from the gold companies. But it was really telling when we saw the world's biggest gold producer just days ago, basically Newmont, come out saying that their costs are the highest that they've ever seen in a decade. That's very telling. And so we're starting to see those results come through for the smaller gold players. Today, we heard Northern Star. We also heard, from the other gold producers as well. If we just call out some of the results that we've seen so far, it looks like they both perhaps maybe have missed capital exploration guidance, not as strong as expected. So that could be potentially an opportunity for some investors to take profits today. But Northern Star has cut their gold sales and volume for the full year. So that may be, again, opportunity for investors to take some profits off the table, given that their prices have been at records. Also, further down on the spectrum, it's also really pleasing to see that, Ramelius did report good numbers, but They have also narrowed their gold production forecast for the full year. I'm also saying that the undercurrent is, again, that costs are really starting to hurt. So I guess maybe that putting pressure on the RBA potentially to cut when they next meet on the 20th.
All right. Have you had a chance to look at Fortescue?
No, I haven't, but it's interesting to see. I do think that maybe they're probably better than expected, because we are seeing the iron ore price hold up off its lows. And I think if we hear the detail coming out of Scott Bessent and China's negotiations that are apparently underway, I think if you look at the iron ore price, it's telling us that maybe we could see some good things there. I do think that once we do see a deal come into play, I think that'll be once we see, not if, then I would expect significant moves probably in Fortescue, given that it is the biggest miner on the ASX that has the most exposure to China, 90% of their revenue, of course, coming from China. Very different to a BHP and Rio Tinto, who are more so diversified, increasingly selling their offtake to other countries.